Hi, welcome to the Market Alert for Wednesday, the 9th of December 2015. So just like Monday, Tuesday saw the first couple of hours with quite enough momentum to move the market around, and then the latter part sideways as well. And this is likely to be the case for today, and then tomorrow, of course, we get a whole lot of news being released into the market. So yesterday we had the market sideways. I didn't think we were going to get a signal at all as the market opened, traded sideways, and then found support down at the 17,500 level. The market then moving back, closing about back above the 17,550, got a signal, and then the market moved higher. So let's just fast forward here. You see the market going through the entry price, and even when this was actually filled, I was concerned that we wouldn't actually see the market move higher. Just ignore there, I was just after some of that information whilst watching the market. So the market then eventually drove through, but came back. It was struggling, and the reason for that is because of all of this to the left here, this weakness where the market had moved lower before. So in order to drive higher, the market needed some buying coming into the market. So again, it's now sitting sideways, and then eventually we see the market go up to the scalp and just above it before it finds some weakness. And it's in this area here that I decided to call this one a day. We've got the weakness in the background, and it didn't drive through the psychological level there of 7,600. I think that's what it is. Let's just have a wind back to get the 7,600. So this one took the money off the table, and you will know what happened after that. We see the market coming back, and then it traded sideways and eventually went through, where you can see there for 70 odd points or more. I'll just bring that back for you. There you go. So the market eventually drove through. I wasn't in this. Like I said, I didn't like this weakness on this side, and it didn't drive through. If it had done this on the second bar, then maybe so. But what you like to see is the market drive through. If this bar had happened here and driven through, then it would have been nice for the rest of the ride. But I didn't stay in for that. It was just 21 points on that. And then we got the sell signal. And again, I'm going to fast forward on this. See the market trading sideways. The good news here is the market's got to go through the entry price below the psychological level there of the 650. And then we see the market being filled, driving down to the actual scalp there at 17,600, and then we see this one go through. So the market's now gone through. I've removed the scalp, the initial stop, and you'll see I've also removed the scalp, and what I will do now is put in a stop as the market then continues lower. We'll move the stop, and you'll see that in a moment. And what I was doing was trying to get not quite on the line. I wanted to give the market a bit above it, because we all know as we come back through these areas of resistance and support, these major psychological levels, then they do become more of a ceiling, and that's what happened here. You can see how the market eventually had to drive through it. It took a lot of hard work and then ran out of steam and came back. So the likelihood is that it's going to move lower from there. And you'll see the market sideways, comes back, has a look at it, and then you'll see prices moving lower as well. Now what I've done here is drawn in this line here. I wanted to see if the market could take this out, because if it could, it would also take out or trade down to the psychological level here of 17,550 as well. So the market came back. We were heading towards the quiet session, as I've warned this week, after the first couple of hours. We're already in the quiet part of the session. The market is only going to really give any sort of momentum in the first couple of hours, and then after that it will become quiet. So let's just move this forward. We've now eventually broken it, and then prices trade down to the psychological level there. You'll see it just driving through, and that was another 80 points on that trade. So not a bad day at all, actually. I wasn't expecting anything like that when we had just the 20 points on there. I thought that was going to be it for the day, but certainly the weakness in the background, as I spoke about in yesterday's market alert as well, and we'll have a look at that now. Actually, just bring something else to your attention there. So we're in the daily chart, and in yesterday's market alert I spoke about this 17,635, and you'll see the market actually took this out in the pre-market session. The market was sitting at the 17,650, and then all of a sudden we drove down to the 17,600, taking out this low, and then the market moving lower. And that's why I was more interested in the downside than the upside, which is why there was only 20 points for me on the upside, because the market already showed that weakness. And of course it continued down to a low of 17,482, just below that 17,500 before. You can see the market coming back off the lows before the end of the session, and then of course now we've got this price bar here, and this one actually is indicative of the market moving higher for today as well. When it comes off the lows like this, generally the market will move back to the upside. So in the evening part of the session, I didn't trade. There was one trade to the upside there, and then again we went back to the sideways and a loser there if you did trade through the evening session. And again, as I said in the market alert, if you've had a lot of points out in the beginning part of the session, don't bother with the latter part. I can't see the point, and that's where some discipline comes in, of course, because greed can take over. You think, well, I've had two winners, I might have a third, but we know that at some point the law of averages is going to take care and throw in a losing trade, which you want to avoid if you can. So if you've got profits in the first part of the session, then stand aside. In the news front today, well, that's it. That's your news for today. Crude oil inventories out at 3:30 p.m, so it could be a very quiet part to the session. And if we look at the chart now, we've got a very quiet sideways move there. So it's a case of having a look at the market before the main session opens. If there's enough volatility, 100 point swing range, then we could expect a trade. But like I say, unless there's something of a geopolitical or a financial catastrophe somewhere, I would expect the market to be fairly quiet for today, especially given that we've had two I would say more than volatile days, actually, given that there wasn't any Federal Reserve members wheeled out or any major economic news. And then finally, in the implied volatility, 1535 up sharply because of that momentum that gathered in the pre-market session to move the market down, and therefore pushing the implied volatility up slightly. So this is even starting to move to the upside as well. So who knows what could happen today, but my money's on that it would be fairly quiet, unless, like yesterday, the crude oil market, the bottom went out of it and you're headed down to $36 a barrel, which caused the market to move lower in the pre-market session, even though there wasn't any news. So like I say, there can be things in the background like that also move the market as well. But the best way to judge it is to have a look at the pre-market session for certainly the hour before or a couple of hours before, and if there's a lot of volatility in a good range, then it's likely that we'll get a bit of momentum in the first hour or first couple of hours, but after that I would expect the market to be sideways, like I say, unless there is some other mitigating circumstance, such as political or geopolitical, or say another market that suffers some sort of volatility that has a knock-on effect. Right, that's it. I will see you in tomorrow's. Thanks for watching, also for your support.